Experian, and Equifax, you want to have at least 2 to 3 accounts reporting. This is going to bring you outside of the auto failing score that they give you for not having anything on there to begin with. And so their accounts, whenever they report, again, one of the fastest ways you can change your information on there is either A, use the framework that I gave you earlier, shooting up that email, or B, when you make that payment, if it's updated already with the creditor or with the vendor that you have, things like your LLC name, maybe if you have a new EIN, a new business phone number, like whatever that is, when you update it with the vendor or the creditor, it gets updated inside of the Experian and Equifax business, like we covered earlier today. This is typically where financial accounts are going to report, like business credit cards. Banks are sometimes going to check both your personal and your business credit profiles to determine your credit worthiness. Me and Rad were actually talking about this. I did a funding play on, who was it, right? It was Fifth Third Bank.
Yep.
And I think it was, they checked Experian personal and Experian business for a client. And the only reason that they knew that Experian business was pulled is because their NAV shot off an alert. And then when they looked at the bank, it told them Fifth Third Bank. So something to keep in mind, 100K, yes, it was PG, but it was no doc because Stellar Personal Credit and Stellar Business Credit was attached to it. Again, no doc. That means that you didn't have to show any type of tax returns or any type of bank statements. Now, business credit based on a tier or level guide.
Real quick, because we keep saying business line of credit. Can you, like in 5 minutes or less, explain the difference between a business loan and a business line of credit and why a business line of credit is better than a business loan?
Okay. So,
just so it lands with people in the room that maybe keep saying line of credit, credit cards, I got loans. Like, just
it's interchangeable. I see your point. Okay.
Yeah.
We'll do it. So business credit cards, business loans, and business lines of credit, they sound similar and people use them interchangeably, but they're different. A business credit card is essentially that one plastic that you have where you can swipe, right? So the issue that you have with that, or actually the pros on this, I'll go pros and cons. The pros that you have with a business credit card is that I call it like an Army Swiss knife, right? Where you can use it for just about any transaction, as long as it doesn't really require you to dump some of that into real estate where you have to use it for a down payment, because at that point, you have to get creative pulling the money out. You guys are in this community. You guys are smart. So that's the route you wanted to take. You can go ahead and do so, right? Again, the pros with it is that you could essentially use it for just about anything. And it's one of the easiest things to get because it usually goes off of app only, AKA no doc, AKA stated income, which means whatever you put on the application, that's what they're going to go off of as long as your personal credit score is intact. And the secondary, your business credit score being intact. So whether you are a startup on day one or year one, business credit card is going to be your go-to because it's the lowest barrier of entry, which is why funding companies tend to use that method over anything else. Your business loans and business term loans, that's when it gets a little bit more intricate, because then at that point, that's essentially, it's a loan. And so that's what we call like a lump sum of money that's hitting your accounts, but it's not revolving, it's an installment. So if you have a $60,000, let's say business loan that hits your account, is that fantastic for building business credit? Yes. Is that fantastic for a real estate project, construction? 100%. The only issue though, the downside, remember, it's pros and cons. The downside to having that is that once you pay that off, that's it. It's gone. You have to go back out and get another loan. Business lines of credit, however, it's like the best of both worlds, which is why me and Rad are talking so much about business lines of credit. And we're going to continue to talk about business lines of credit on our channels. And we're going to continue to bring you guys more content even next week when we're talking about funding frameworks, is because with business lines of credit, it's like the best of both worlds. One, you usually get a much lower rate on a business line of credit than you would on a business loan. That's a given. The second thing is that it's as good as cash, meaning once that line of credit hits your account, you can extract from it, and then you only pay interest on the amount that you are using, not on the total lump sum. So if I have a $100,000 business line of credit and I take out $25,000 for a project that I'm working on, for payroll, for my construction guys and gals in the room, right? We know that we're usually future pacing projects where we have to pay for those projects in advance out of our own pocket. I can use that $25,000 business line of credit to future pace that project. And then as money's coming in, I'm only paying interest. So let's say in Rad's case, 3.5 on a prime rate on the 25K that I took out, not on the 100K that I have. And you can also use the interest that you pay as a tax deduction as well, because none of this money is taxed anyways. Does that make sense?
Bars, bro. Keep rocking.
Good deal. So Experian, Equifax, and business. I think we pretty much just covered it. But the main thing with them, 2 to 3 accounts, I want to get you guys out of jail, meaning out of that auto failing score. This is what a lot of people would call tiers, right? Not like tear drops, but tiers, like levels. I like to call it levels, but I use both words, tiers or levels. So if we're looking all the way on the left side, which I think the majority of us just kind of feeling the room out, we're going to land between 1 and 2, right? So this means that you've done 100% lender compliance. If you have no idea what 100% lender compliance is, check out the call that we did last week on the quick recap that we did. You're 100% on that. DUNS number is, your DUNS number is established. You're done in Bradstreet. You're done in Bradstreet, and Experian info is correct. You have at least 1 month in time in business. You have a business account that's currently open, not closed. So show of hands, how many of us are in this column right now? Drop a 1 if we are, and don't say anything if you're not. Let me know, bro.
Lots of 1s.
Good deal. So then I'll say this. On tier 2, 3+ done in Bradstreet and Experian trades already reporting, at least a $500 trade line already reporting. You have a Paydex and IntelliScores already started. Now, this doesn't mean that you're in the green. It just means that it's already started. 3+ months in business and 3+ months, say that 100 times, 3+ months banking activity. How many of us are in column 2?
We got some 2s.
Okay, good deal. Going into 3, and sometimes I group up 3 and 4 together with some of the accounts that you'll usually start qualifying for, but I'm gonna keep them separate here because of some distinct differences. So with 3 is you have 5+ accounts with on 3 with prerequisites for tier level 3. At least one of the accounts is $2,500 or more. You have a 60+ on the Paydex and the IntelliScore. You have at least 1 year in business and your mid-bank rating. This is why it's important to pay attention in class, because we spoke about that last week. Your mid-bank rating is at least a 4. How many of us are in tier 3?
We got 1, 2.
And no shame. Like, if you're not there yet, that's why you're here on a Thursday with me.
Yep.
Right? That's why you're here. Like, you're investing your time, you're investing into this, right? And even if it's free, like, you're investing your time into this to get the most out of it. Tier 4, 10+ accounts, done in Bradstreet and Experian trades, right? We can also group in Equifax in there as well, because I like to add them. So let's say we have 5 accounts with Dun & Bradstreet, and then let's say we have like another 3.5 accounts, whatever that math is, between Experian and Equifax, because that'll get us out of the red with them. At least 1 account being $5,000, so on the trade line, and 80 on the Paydex, a 76+ on the IntelliScore, and then at least 2 years time frame in business, and then a low rank or a low 5 for the bank rating. How many of us are in 4? And then I'll give you like a little tip here. Similar to how it is on an algorithm, is not a one size fits all, right? So if your business, let's say you've been in business for over 3+ years, you'll need far less trade lines, if that makes sense, for you to get bumped into that level 4, because now it's kind of like a swing, right? Similar to how it is when we're talking about personal credit accounts, where maybe you don't have the highest limits on maybe your Amex, but you've been a freaking customer of theirs for the last 15 years. That age and that on-time payment history is going to kind of like supersede and going to go above having these crazy high limits, especially if it's a new account. So this right here, again, it's a basic framework, kind of like a gauge for where you're at that I want you to play around with. Now, pro tip, while this chart is here, I want you guys to refer back to vendors and accounts. And I have to say this, to vendors and financial account holders or account issuers for their actual requirements, right? The reason why I say this is because some of the data points that we're going to be covering, I'm going to give you guys some kind of like some side steps for the most part where your business needs to be in order for you to be able to apply and get approved for some of these accounts. But again, things change at the time of this recording. If you would have asked me this same time 2 years ago, what was the main source for non-PG, EIN only, I would have told you WEX. WEX has since been PGing. WEX PGs. WEX has since been PGing. No way around it. And so even with some of the data points that I give you, they could change that. But as of right now, they're causing people to PG. So